Inheritance tax. Normal expenditure out of income. As you get older and your wealth increases, you may get to the position where your income exceeds your expenditure. When this is the case, then if you do nothing, then your IHT liability when you die will get worse, as your accumulating income will add to your estate. Fortunately, there's a solution to this, as gifts made out of surplus income that become a normal amount of your expenditure are exempt from IHT. For this exemption to apply, the expenditure must become normal expenditure for the donor, thus indicating that there are For this exemption to apply, the expenditure must become normal expenditure for the donor, thus indicating that they are done repeatedly rather than as one-off payments. They must be funded out of income rather than capital, and your executors will need to substantiate this. So you need to keep good records to support that this is the case. You also need to show that having made such gifts, you can still maintain your normal standard of living. Whilst there is no limit on how much you can give on this basis, it doesn't solve your underlying IHT position, which is based upon your capital. It's more a case of making sure the problem doesn't get any worse. This is an excellent way of funding your grandchildren's education costs. The income out of which the expenditure is made must be after the deduction of income tax. As well as keeping documentary evidence of your income and expenditure, it's a good idea to keep some documentation to confirm your intention to make the payments on an ongoing basis. For example, a letter to the recipient confirming that you intend to make the payments. Thank you. Once you have 3 years track record, it becomes easier. The problem arises when death is after only one such payment has been made. This is where the documentation comes in very useful. Please don't look upon anything